Dutch inflation data has come in at a higher than expected 3.1%, up from a forecasted 2.5%. The Netherlands is one of the wealthiest countries in the EU, but does the reality match up? ABN AMRO's Nico Klene is on the phone with me now. Nico, firstly, can you please talk us through the factors behind today's inflation data?
First of all, I think that this 2.5% expectation was a bit too optimistic. Well, actually, I had expected a decline in inflation as well, but more to 2.6 or 2.7%. But anyway, it was higher than expected. And the main reason is due to the increase in rents. And we expected an increase in rents. It's due to government policy, but this increase in rents was a bit stronger than expected. So I think that's the main reason. And furthermore, food prices and price of clothing were a bit higher than expected, so this contributed to this increase in the inflation rate.
You mentioned there the sharp rise in housing rent prices. With confirmation that rent prices are on the up, how does this sit with concerns over the Dutch housing market?
One remark, they are on the up that way. That means that we have seen this pretty strong increase in rents. But usually in the Netherlands, the rents are adjusted once a year. So this higher rent level is more or less fixed for the next 12 months. So we don't expect further month-on-month increases in rents. Well, I said, the new government introduced a couple of proposals last year, which both concern the housing market for homeowners as well as for rents. They strive for a more equilibrium between both markets, more market influences, and it was generally felt that part of rents in Netherlands were too low. So the government allows housing corporations to increase rents by more than in the past, especially when incomes are higher. So this is more or less income related. They want to prevent people with somewhat higher incomes to have a rent that is actually too low, and they think they can afford higher rents. We have the problem with the weak housing markets, with falling housing prices, and we have seen the kind of movement to the rental market, since it has become a bit more attractive due to the uncertain outlook for the housing markets for home owners. And I don't think that this stronger increase in housing prices will have that much of an influence on the other part of the market. So no, I don't expect this to have a strong impact on housing prices.
Dutch banking group ING have this week reported a 39% drop in second quarter net profit, citing a weak Dutch economy behind this squeeze in earnings. Is this a broad concern amongst banking institutes within the region?
Well, I don't know exactly. I understood from their press memorandum that higher provisions are a main reason for this development you mentioned, since they were not rather optimistic about these figures, rather positive about these figures, and the market was rather positive as well. But I think that in general, but I don't know. I have no clue what ABN AMRO will announce in a couple of weeks. So, but in general, I think that all banks in the Netherlands and everywhere elsewhere in Europe maybe as well have to raise their provisions due to the uncertain and the weak development with companies.
The Netherlands is currently sitting in its third recession since 2009. Talk us through consumer confidence. Do the Dutch remain optimistic?
Well, actually, we are not that optimistic. Consumer confidence is extremely low in the Netherlands. And we have seen some improvement early this year, but in recent months it again dropped. So actually, the Dutch consumer is not optimistic, and especially the developments on the housing market have had a strong impact on Dutch consumers, which had sent consumer confidence lower.
With business owners now arguing that the economy needs an injection to get going and combat stagnating growth, what measures does the government have available to it?
Well, that's an interesting question, since indeed the leaders of employees' organizations have asked for more stimulus. Anyway, to refrain from additional cuts. But actually what the government will be doing is, the general expectation is, in order to reduce their deficit for next year, which, according to the most recent estimates, will be above the well-known 3% of GDP. Actually, the government is planning further austerity measures of around 6 billion euro, which is about 1% of Dutch GDP. So I'm afraid we can't expect too much of stimulative measures for the Dutch economy and for the Dutch corporate sector. The first aim of the government is to bring its own house in order. This is, in the short term, this is, not that favorable, of course, for the Dutch company sector, but in the view of the government, in the longer run, it will be better for the government. And it could be possible that they come up with certain measures to improve a few things for the companies. But in general, their policy will be again restrictive next year, with some negative effects for the Dutch economy.
Nico, many thanks for your comments. That's all we've got time for right now, but the Dukascopy TV team will be back shortly with more exclusive interviews. Goodbye for now.